What's up, everyone? I hope all is well today. Matt Garland here, NMLS number 58700, but better known as MG the Mortgage Guy. So, look, guys, today we're going to talk about co-signers and non-occupied co-borrowers. All right. So, I get a lot of questions every single day via text message, DM, email, even on our pre-approval calls. Right. Folks are always wanting to know, especially if they can't qualify for a particular property on their own, is can they add someone else to the mortgage to help them qualify? Now, the answer to this question is absolutely you can, right? You can always add a co-borrower who's going to live in the property with you, especially if you're going with a primary residence. In this video, matter of fact, let me just specify that right now. This video is if you are looking to purchase a primary residence. This video is not for investment properties. It doesn't matter if you're a first-time home buyer or your move-up buyer or you're downsizing. This is just particularly for folks who are looking to add someone else to the mortgage to help them qualify. Now, like I was saying, you can have a co-borrower who's going to live in the property, but the most common ways for us to structure your loan is to use a co-signer or a non-occupant co-borrower. So look, first of all, let's go to the definition. So I'm going to show you guys my screen real quick. All right. A co-signer are credit applicants who do not have ownership interest in the subject property as indicated on title. They are required to sign the mortgage or the deed of trust note. They have joint liability for the note with the borrower, and they do not have any interest in a property sales transaction, such as they're not the property seller, they're not the builder, or they're the real estate broker. All right, so this is what a cosigner is. Now, let me break this down a little bit more for you guys. The cosigner, again, is a credit applicant. They do not have ownership of the property, okay? They are not an owner of that home they are helping you to buy, all right? They're signing a mortgage and a deed and a trust because they're taking a financial responsibility for the home, but they're not taking legal ownership, all right? Now, a non-occupant co-borrower is a credit applicant on a principal residence only. Again, principal equals primary residence who do not occupy the subject property. All right. They may and may not have ownership in the subject property as indicated on title. They are going to sign the mortgage or the deed of trust and note. They have joint liability for the note with the borrower. And again, they do not have any interest in the property sales transaction, such as they're not the seller, they're not the builder, or the real estate broker. So here's the difference between this. All right. A non-occupant co-borrowers, right? The main thing of this is they can either have interest in the property or not have interest in the property. All right. And again, obviously it's not an owner occupant, so they're not going to have ownership. Live in the property, but you can kind of choose if you want them to have ownership in the property or not. All right. So let's go to a quick example of when you guys would use a non-occupant co-borrower to help you qualify for a mortgage, right? So we have a borrower right here. Their income is $4,000 a month. They have their liabilities at $2,060 a month. So as they're trying to purchase their home, this home in this example, their DTI is too high. They're at a 51.5% back end. So now if you add the non-occupant co-borrower who makes about $5,500 a month, they have $1,800 of their own liabilities. Now when you add the income plus the debt, right, now that brings their DTI down to 40.63%, which will make them eligible. All right. So in this situation, this non-occupant co-borrower was able to help them get approved for this mortgage. Now, when can one of the most common questions that I'm always getting in this scenario is if someone is going to co-sign or be a non-owner occupied property, how would that affect them in the long run if they wanted to refinance their property or purchase more real estate in their personal name? Will this mortgage debt hurt them from qualifying? The answer to that question, I should say, is absolutely not if you do it the right way. Now, you have to make sure you as the borrower are making the monthly payment out of your own bank account. All right. If you have a parent that's co-signing or being a non-occupant co-borrower, do not have a joint account and have that mortgage paid out of that account. Set up your own separate mortgage account in your name. They have nothing to do with it. And then make the payments from there. All right. So when a borrower is obligated to a mortgage debt, but is not the party who is actually repaying the debt, the lender may exclude the full monthly expenses, principal, interest, taxes, insurance, or homeowners association dues from the borrower's recurring monthly obligations. If that party, like I said, is making the payments that's obligated on the mortgage debt, there are no delinquencies in the past 12 months on that property, and the borrower is not using any rental income from that property to help them qualify for this new property. So again, guys, you got to make sure you don't hurt your co-borrower, your non-occupied co-borrowers or co-signers. You don't want to mess them up in the future, all right? So you got to make sure you're paying your mortgage on time, and you have to make sure you're paying it out of your own account in order for them not to be affected by your mortgage payment. All right, so look, this Tuesday, 1 p.m. Eastern Standard Time, I'm holding a special class for EYLU members, all right? We're going to be breaking down closing costs. I'm going to go through everything from discount points, title fees, transfer taxes, seller's concessions. How do you know if you're getting a good deal or not? This class is happening Tuesday, 1 p.m. Eastern Standard Time, exclusively for EYLU members. And if you guys want to become a member today, make sure you click that link in the bio and make sure you use my annual promo discount code, EYLMG. EYLMG, and save 40% off the price. Again, this is Matt Garland in MLS number 58700, but I'm better known as MG the Mortgage Guy. Peace.